Oh, it's Adil bringing you a review of the US markets. Obviously, given the fact that we've closed, the market's closed now. It's Friday the 3rd of October, and obviously giving you an insight from a fundamental analysis perspective for Monday's trading, the 6th of October 2014. Okay, so basically, where are we? Okay, so yesterday the markets obviously sold off based on the fact that we had tapering fears, we had Ebola fears, we had Brazilian fears, we had Hong Kong fears. Okay, so there's a lot of concerns in the marketplace. Okay, with regards to obviously the stock market selling off. So and it was quite one hell of a sell-off as well for yesterday. Okay, you also had rumors about capital controls, so on and so forth. Okay, so that's basically what caused the sell-off yesterday. Overnight, the Asian markets did sell off initially, but then obviously recovered. The real attribution, well, one of the reasons why the market was selling, what Mr. Leidy actually referred to as well, which is quite important, was the reference from the BOJ. Okay, yes, I understand from the US market's perspective, tapering phase, etc., etc., but one of the biggest concerns that Mr. Leidy referred to was the BOJ remaining flexible and extending the period in which they're going to be waiting for the 2% inflation target to be hit. So that in essence means no more QE, okay, or definitely a pause on QE for now, okay. Let's just have a look. I've saved it here on my radar here. Where market is focused on the wrong. Here we go. Yeah, that's interesting. Here we go. Okay. So while the forex world is hanging around every word from Draghi on Thursday, obviously Draghi sell off as well. That's one thing I blatantly missed out. Okay, given the fact that Mr. Draghi didn't do QE. Okay, another central bank story hit that could have even larger implications. The day the Kiwi and yen were top performers while the pound lagged. Okay, Draghi, he were quiet on Thursday. Obviously, remained hawkish, not dovish enough. The market was expecting details on bond purchases, but officials remained vague. It's increasingly that Draghi and Co relying on the asset quality review on the TLTRO. Euro trading was choppy. Some traders were looking for a hint at sovereign QE, and that might have contributed to some euro strength, but the broader trend was USD weakness, and the market squeezed euro shorts. Okay, obviously that didn't transpire today because I got stopped out on 2 euro longs, which was a shame. As Draghi was speaking, a central bank story of greater implications may have hit. The Wall Street Journal reported the BOJ may loosen its prime frame. Here we go. As Draghi was speaking, a central bank story with greater implications may have hit. The Wall Street Journal reported the BOJ may loosen its time frame for hitting its 2% inflation target. At this point, traders and BOJ policymakers themselves all knew the target wouldn't be hit, but lengthening the time, obviously the time frame, the timeline, sends a signal that the BOJ won't do more anytime soon. Okay, so no QE or no Kool-Aid from Draghi, no Kool-Aid from the BOJ. Obviously that doesn't bode well. Add in the fact that we've got basically tapering concerns out of the US, and you have a slight problem. Okay, we have a problem and we have a conundrum. Okay, so this is basically the situation that we find ourselves in right now. Okay, so bear that in mind going into obviously next week. Now the other conundrum really is given the fact that US dollar strength today masked yen strength. Okay, so given the fact that obviously the economic numbers out of the US were stellar, but having said that, there was one variable that or one piece of information, news information, that a lot of people didn't focus on, and that was the wage price growth. So given the fact that the US dollar did strengthen, I mean, I can bring up the chart, the US dollar index. Okay, there we go. Okay, so I was expecting this H&S formation to play out on the dollar index, which obviously didn't transpire, given the fact that the NFP or the data today obviously put that to bed. Okay, so I was expecting that H&S to play out. That obviously didn't, and close the gap below. That wasn't the case. That's the reason why I was actually bullish on the euro today, given the fact that we've got a weakness with regards to the dollar, and obviously that's not the case, and again we've broken out and made new highs. So interesting times. Okay, interesting times. So given the fact that the wage price growth was not there, so that's something that a lot of individuals need to focus on, and that's something that's not been transparent today. So let's just see if I can bring that up. Okay, let's have a look here. Okay, I can't find it at the moment. I'll bring that up as we go along into this video. Okay, so wage growth. Okay, now having said that, if you look at the US dollar, obviously the markets obviously continue to move higher and pummel higher. So again, that's going to be something that I'm going to be focusing on hopefully into next week. I'll try and do some more reading and obviously present that to you as well. Okay, so now that we know the scenario or the situation, okay, with regards to the market sell-off obviously on Thursday, then obviously today's reversal or move higher is interesting. Okay, the way in which we can understand that, okay, is the jobs data was stronger than expected, so better than expected report knocked the euro to a more than 2-year low. So today's strength or euro weakness was more to do with dollar strength as opposed to euro weakness. So bear that in mind. That's interesting. Okay, so going into next week, given the fact that obviously Mr. Holland has mentioned the 1.25 level as being the lower level, or the interesting level, or the stable level for the Euro USD. That's going to be very interesting. So dollar index made a measure of green, etc., etc. There was an M. Okay, so basically we had tepid wage growth along with stronger jobs data. That leaves the US markets in a sweet zone or a Goldilocks situation. That's basically what I'm trying to allude to. But having said that, even though wage growth is still tepid and is not sufficient enough for the Fed to hike rates, they will be pressured into hiking rates. Hope you understand what I'm trying to say. Okay, they will be forced into hiking rates because this concept of QE is not working in order to push inflation higher, because we had QE1, QE2, QE3, and yet still we're concerned about wage inflation. So there must be a conundrum, must be a problem. Also, given the fact that oil has obviously fallen, okay, and that's taken, or commodities have fallen, okay, so as we know, oil has fallen quite substantially, okay, gold has fallen quite substantially, so that certainly takes out the inflationary concerns out of the market as well. So again, from a fundamental perspective, it's probably best if I make another video and explain all the fundamental arguments for and against. Now that I've explained the reason why the market rallied today predominantly, or having said that though, we did have concerns from Hong Kong still. Okay, we've had concerns about emerging markets still. We've had concerns with regards to Russia, obviously with regards to ruble and the capital controls, the fear about capital controls there still. So there's a lot of concerns, and obviously no QE from Mr. Draghi still, no QE from the BOJ still. So that's why you add in the fact that you got light volume on a Friday, and obviously you got yourself one hell of a short squeeze. Okay, and obviously Ebola phase as well, etc., etc. So that's basically today's situation. Really was more of a short squeeze post short squeeze stroke strength or Goldilocks scenario. Okay, with regards to the US markets. Okay, so let's have a look at the situation now from a technical basis. Okay, now that I've explained the fundamentals, and that's taken longer than expected. Okay, so basically what do we have here? Okay, let's start with the S&P 500. As we can see here, one hell of a bottoming tail, okay, a doji candle, and the markets obviously retraced the full red candle, a full sell-off from the red candle itself on a daily chart. Let's go to a 60-minute chart, and obviously this key trend line still remains, so that all eyes on that key trend line, and obviously we've got an interim trend line as well. So if we just make two trend lines here, we've broken the small trend line initially intraday, obviously reversed, and now we're back above that trend line. So for now, given the fact that it's been negated, I'll ignore that for now. And this is a key support level here, 1925. Watch out for that 1925 level. Okay, let's go to a 60-minute chart of the S&P 500. Obviously we've broken out this bearish trend line now, so watch out for that. From a bearish trend line perspective, you've got horizontal resistance at 1986, which is very unlikely to be hit for now. Resistance at 1977, and given the fact that we can use our Fibonacci retracement from this pivot high to the pivot low, we're slap bang into the 75% resistance. So from my perspective, if we're going into well, I remain short the Nasdaq anyway going into the close, so I've got short Nasdaq at 4030, and obviously previous support equals resistance in this region here, given the fact that we're into 75%. So expect a sell-off early doors, okay, from going into next week for the S&P 500. Okay, so definitely bearish on the S&P 500 at this level at 1970. If you do break that, then obviously 1985 is your next level, and you do have a level here at 1978. So watch out for those resistance zones. But from my perspective, certainly looking to make a move lower. Okay, and watch out. The move lower may well be potential for inverted head and shoulders formation. So your left shoulder, head, okay, and then watch out for this right shoulder, because then you are going to propel higher. And obviously, again, obviously if you have some geopolitical situation, any socio-economic concern, then obviously that's out the window and down we go, okay, quite substantially. But everything holds well, given the jobs data that's come out, Goldilocks situation, etc., etc., then this certainly will look to propel higher. Okay, right, now let's go back to the always remember the S&P 500 should always be verified by the Russell, especially if you are looking to learn the concept of intermarket analysis. Okay, so let's have a look at our Russell now and see what our Russell is telling us. Okay, so Russell itself, H&S formation, so that's from a daily chart straight away bearish. Okay, that's what your alarm bell should be ringing, because you've got a target of around 91 to 86, so you've got a target around 81, so 81 to 91 to 86, 91 down to 82, sorry, 91, 82, let me just get this adjusted. 1 second, 91, your neckline is 83, sorry, so 91 to 82, so you're looking at 9 points lower, okay, and you're looking at 73 on the downside. Okay, so that's basically looking at 73, okay, on the downside for in terms of the H&S. Okay, yes, we've held this previous resistance equals support, horizontal support. We've had this dead cat bounce now, and looking for the markets to certainly propel low. And this bounce is nothing compared to the S&P 500. As you can see, the S&P 500 is certainly the leader. Okay. Excuse me, the missus just made some coffee, so I'm just drinking that whilst I work. Okay, so basically we have now your H&S in place, so we take the pivot high, take it to the pivot low, given the fact that we've established this bounce here. Obviously, watch out for the 83 to 84 level, which is a retest of the right shoulder. The only time I'm going to get bullish on US markets, and this is going to be very interesting for, remember that inverted head and shoulders information I've just referred to in the S&P 500. If the neckline of this Russell breaks, and then it creates a short squeeze, okay? Neckline breaks, will create a short squeeze, okay? And then obviously if that creates a short squeeze, and the S&P 500 certainly propels higher, etc., etc., etc. So it's all about, with regards to US markets right now, from a fundamental perspective, it's tapering, frizz, tapering, no tapering, tapering, delay tapering, interest rates rallying, so interest rates being brought forward or being pushed backwards, okay? Any signs of inflation higher or wage growth higher, then tapering phase will dominate, stock market sells off. But if the market can weather the storm and it considers good news to be good news or bad news to be bad news, then obviously the situation has changed. So this is the argument of good news equals bad news and bad news equals good news, and vice versa. But if good news equals good news, it's like a Donald Rumsfeld speech, where then you have known knowns, then you have known unknowns, and unknown knowns. No, some knowns are known without others being known, etc., etc. So it's baffling, okay, in order to understand and comprehend. And the only way you'll know whether good news equals bad news and bad news equals good news is to gauge a market reaction. One day it's good news equals good news, the next day it's bad news equals good news, and vice versa. So it's really very the stock market itself. This is why a lot of when I went to my mentor, my teacher with regards to economics at university, he stated that a lot of students have a movement, and a lot of teachers have a movement that they want to rewrite the economic textbooks, because obviously the markets are not adhering to that right now. They have their own rule books, so it's unprecedented with regards to central bank intervention. And given the fact that Mr. Bernanke claims that the Wall Street crash occurred due to the lack of QE, and he thinks that he's going to solve it on this occasion and prevent the Wall Street crash. From my perspective, all he's done is delayed the crash, probably exacerbated it and made it even worse. Okay, because when they do unwind us off QE, okay, and shake us off that, it's going to be very interesting to see if this market can hold by itself. Okay, and yesterday was a testimony to that. Given the fact that Mr. Draghi didn't do QE, what happened? The stock market sold off quite brutally. So, and obviously with regards to the BOJ news, that's not settled in yet, given the fact that the BOJ USD JPY rally today was masked by dollar strength. So it wasn't yen weakness, it was all to do with dollar strength. So is that bullish for the markets? No. It's going to be interesting anyway. Okay, so again, like I said, I don't want to go into too many fundamentals. So technically speaking, that's your situation that you find yourself there. Okay, so 60-minute chart. Okay, 60-minute chart. This seems to be setting up a potential still lower lows, lower highs. Obviously we've retraced. If you use your Fibonacci tool here, take the pivot high, take the pivot low, we've obviously retraced into the 65-75%, and that certainly is resistance for now. Okay, and that's basically where we find ourselves in. There's nothing else that I can say with regards to that, and that's basically where we are. We do have this previous support equals resistance, so watch out for that zone there around the 82.5. Okay, and 10-minute chart, nothing really to deduce there. As you can see, we certainly have hit this potential wall, and there's an unfilled gap that needs to be closed below. Okay, so interesting to say the least. Okay, so that's your Russell chart, and that's something that we're going to be focusing on. Okay, right, so we know that Russell's weak, we know the S&P 500 is weak. Now let's have a look at the rest of our American companions. Okay, so the Dow Jones. Okay, this is interesting, folks, very interesting. We had a H&S formation. That H&S formation has been negated. Why? Because we closed above the neckline. Okay, generally speaking, when you have price action like this, it generally creates a short squeeze in the long run. But having said that, we'll give it the benefit of the doubt for now, given the fact that the market obviously has this key trend line that we are adhering to, and let's just take it from there. But from my perspective, I will be very cautious with regards to the downside. I will take away this H&S formation because that bearish pattern is no longer valid. Okay, and all eyes will be on this key trend line and the upper body of this red candle. Okay, because the bears are still just about hanging on. Okay, if obviously this trend line negates, as you can see here, this trend line didn't negate, this candle didn't negate, bears won. This one here, this candle here has been supported by fundamental news flow, i.e. stronger jobs data, which questions the market sell-off. And plus, whenever you have a negated pattern, then it generally causes a emotive move in the opposite direction. That's exactly what we'll be expecting here. Okay, so just watch out for that. This is going to be very interesting. Okay, provided this level here, which is 17,040, 17,050 holds as resistance, and obviously down we go. If it doesn't hold, then watch out above. Okay, and you can look for a potential short squeeze to the previous high. Okay, let's have a look at a 60-minute chart. Let's just have a quick look at this. Okay, so using your trend line, so taking the pivot high here, just connect it to the next pivot high, as we are into resistance now. So watch out for that. Let me just get rid of these trend lines here, so these are no longer good. Okay, and so yeah, certainly observe that. Take the pivot high, take it to the pivot low. That's one hell of a move back into 75% resistance. So conclusion, market's into resistance. Okay, so I'll be short. Obviously, I'm already short the Nasdaq, and I'll be looking to short European markets from the open or get-go next week, given the fact that there's no QE in Europe. Okay, so that's basically a situation that we have here, into resistance. Okay, I can verify that and corroborate that. Okay, with regards to the Dow Transportation Index, as you can see again, H&S formation. Okay, so family fortune style rejection here. Okay, so H&S formation has now been negated. This key trend line, as you can see, certainly held up well, certainly been respected. And given the fact that the market's obviously the loss of the drop in oil price recently is certainly helping the Dow transports, and this red candle has been negated as well. So that's something to watch out for. So remember when I just discussed the Dow Jones 30, and I stated the red candle upper body must hold as resistance if it fails, and obviously it's a failed bull flag. Sorry, a failed bear flag, and a failed pattern equals an emotive move in the opposite direction. You've already had a failed H&S on the Dow Jones. Now you've had one on the Dow transports, and the Dow transports generally tends to lead. Okay, so this level must hold here, 8480 region on the Dow transports. Obviously, if it doesn't, then obviously we short squeeze back to new highs, and the stock market continues its run. Previous resistance equals support certainly held very, very well there, and that diagonal trend line has held well. So certainly good characteristics of a bull market. And obviously the bearish pattern has been negated within 1 day, thanks to Yellen and Co. and her what can I say? Her algos. Okay, so we are into resistance nevertheless. Watch out for that. Okay, certainly into resistance into the 200 MA, and certainly looking for downside or potential downside. And there's certainly an argument or a case here for inverted head and shoulders, but we'll come on to that later on. Okay, so those, watch out for those two, and that obviously, given the fact that the Dow's reversing, then obviously that gives the argument for the FTSE to reverse, but we'll come on to that on another day. Okay, so with regards to the Nasdaq now. Okay, Nasdaq. Okay, so where are we with regards to the Nasdaq? Let's go to a daily chart. Daily chart, we still are in a bearish trend. Okay, we're in a bear trend still, and we remain within that bearish trend, and the bearish trend remains intact. Okay, and that's basically what we find ourselves in. We're in upper channel resistance. So again, and we are still within that bear flag situation, so that's where we remain, and that's basically where we find ourselves in. Okay, so that's where we are at the moment. Okay, so we're in this bear flag. So provided this upper level holds, which is the 4040 level, Looking for a bear flag situation, close down to gap fill at 3900. Again, we'll have to see whether that transpires or not. Okay, so let's see if we can go corroborate that with our other leads and laggards. So go to a 60-minute chart. 60-minute chart, we're into the 75% resistance, so you know that's resistance from the get-go going into next week. Okay, and that's basically what we're looking at there. So looking for a potential reversal back to the 4000 level. Okay, let's have a look at the 10-minute chart. 10-minute chart, obviously we're in this pattern here. Obviously we've had the inverted head and shoulders, so if you look at your 10-minute chart of the Nasdaq, this is something that I highlighted on the markets on Thursday. So your pivot low is 3935, your neckline is 396.95, so you're looking at 50 points on the upside. So basically we've had the 50 points because we've got to 4040, so that inverted head and shoulders formation has certainly played out. You do have the gap at 4090 that certainly needs to close. Whether or not we close it now or later on, that's certainly a question that needs to be asked. But we are into this channel, and this channel certainly looks like it wants to break to the downside, and you do have a mini HNS formation here as well, so watch out for that. Okay, so there's your left shoulder, your head has obviously gone in, looking for a potential small retrace, and bang, down we go. Your head there is 4040, your neckline is 4025, so you're looking at 4010 on the downside, or a potential retest of this inverted head and shoulders. Now there is an unfilled gap below, so there's the battle of two gaps. There's a 4050 gap, and then there's the gap here below at 3990 or 3985, so watch out for that. Okay, we may well close the gap below and then obviously spike higher, but definitely I do expect this gap to close first before we end up closing this gap and this gap above. Okay, so again, battle of gaps, so watch out for the battle of the gaps. It should be interesting. It should be very interesting. Let's just see if we can connect these together. Nothing here. This is a key one. Okay, so watch out for that. So certainly 4050 certainly seems to be a level to watch, but in the meantime, certainly some reversal. Okay, before another propels move higher. Having said that, I mean, if you look at the level here, so 3993, your low level here is 3935. So that's a 60-point move. So 60-point move, 3995. So you're looking at 3. So yeah, ideally that is 4050. Okay, so it does want screaming 4050 for the inverted head and shoulder. So, but we do need a pullback though. Okay, so watch out for that. Because a larger time frame indicates so. Okay, so now let's have a look at the semiconductors. As you can see, we've held this key trend line. We're putting a bottoming tail. So although it is feeble, it's a feeble bounce because it's still within that small red candle. It couldn't even put in a bullish engulfing candle. So again, it's a feeble bounce. And as you can see here, very, very feeble bounce. Everything else has bounced by almost 75% fib. And what's this done? This hasn't even bounced 50%. So certainly doesn't bode well for the Nasdaq anyway. Not even reached 61 or 75, so certainly doesn't bode well for the Nasdaq going into next week, and that's mainly because of Apple delaying its iWatch. There's some concerns there, and obviously concerns in China as well. Okay, so the biotechs. Okay, biotechs seem to be a double top. Certainly is in, looking for a potential lower high. Okay, on the daily chart, 60-minute chart. Okay, we have retraced here into retraced more than 75%, but biotechs have been strong regardless anyway. Okay, just take your pivot low here, take it here, so we are into resistance for now. Okay, so just watch out for that. You do have horizontal resistance in this region here, horizontal resistance there, so that's watch out for those two resistance zones. Okay, although you do have the unfilled gap below, so we need to watch out and be careful with regards to that. As you can see here, the market's putting in a potential double top, no higher high, no considerable higher high. So certainly indicating exhaustion here. You can use your a potential rising contracting wedge that needs to break down. As you can see here, there's your gap. So two gaps that we need to close, or whenever a market leaves an unfilled gap behind, it's certainly a weak pattern. We have had our inverted head and shoulders formation, as you can see here. There's your left shoulder, there's your head, there's your right shoulder, and obviously the market's propelled. So pivot low was 2770. Your neckline was 2770, was that 2770? Your 2830, so you're looking at 50 points on the upside, so 2870, and obviously the inverted head and shoulders target has been met on the upside. Okay, so whenever IHS formation completes, the short squeeze is over, and then down we go into the 200 MA potential gap fill. And again, like I said, we'll see what the geopolitical situation is in with regards to Hong Kong, Russia, Ukraine, or God forbid anywhere else around the world. Okay, obviously Ebola, something else to watch out for as well. Okay, so that's basically the situation. So overall, observing all our US market variables thus far, the conclusion is that everything is into resistance, okay? And there's certainly something pending with regards to the Dow Jones and Dow Transports, because they've broken their HNS formations, which generally is a leader. Dow Transports generally is a leader for the whole market, so that's certainly something to watch out for. And we'll keep a keen eye on the semicons and especially the biotechs to see exactly what's going to happen to the Nasdaq. Okay, so from my perspective, Nasdaq remains bearish of them all. That's my perspective. Then you've got the S&P 500, which is heavily reliant on the Russell, and the Russell is bearish, so therefore that will be bearish. But the only conundrum, the missing jigsaw really, is the Dow and the Dow Transports. And mainly the Dow Transports is strong due to the fall in oil. As we all know, obviously, transports, oil is one of the biggest variables with regards to that being bullish or bearish. So that alone could be just a standout, could be some divergence there. Overall fundamentals, as like I said, the BOJ is delaying its 2% inflation target, so that means that there's no QE. Otherwise they won't have delayed that target from being hit, so they're being flexible, they won't add any more, and there have been concerns with regards to the yen or excessive yen weakness. Obviously other countries around the world are certainly concerned with regards to the weakness and obviously the loss of exports, so and especially with regards to the rhetoric out of the US Fed members about the dollar obviously strengthening too much and hurting exports. So that certainly doesn't bode well. Okay folks, so that's the situation there. So Draghi, no QE, that's obviously the biggest theme or biggest talk, well, one of the biggest variables this week that causes a sell-off, and I think that will be dictating. So you'll see European weakness, which obviously will feed through to US weakness, and Asian markets are tend to hooks, and obviously if the BOJ doesn't do QE anytime soon or any additional stimulus, then you'll find weakness there as well. So I'll try and cover the European and Asian markets as well over the weekend, but that's just some insight given the fact that my mind's still fresh, given the fact that I've been very busy trading this week. Overall, it was a good week. I didn't hit my 500-point target, which I'm really upset about, to be honest. I pushed them up the highest. I think at one time I was 370. I was only points for the week, and I was only 130 points behind, but I tried to push the market and obviously nail that plus 500, but I lost on quite a few trades, so I ended up with plus 291 points for the week, which still I'm happy, but I should have hit the 500 this week because the volatility was there. Anyway, right, time to switch off, relax, and hopefully back in the trading seat next week. Risk on, risk off, wax on, wax off. Goodbye now.